Hello and welcome to the Block Explorer. I'm Colin Brightfield.
Hey folks, I'm Cash Upton.
The Block Explorer is here to educate and inspire you about the world of crypto and NFTs.
We'll do deep dives into critical concepts for understanding what's happening and discuss the current events shaping the space.
We're making this podcast for the curious, the free thinkers, and the change makers that propel us forward.
As we embark on our adventures, remember that none of this is financial advice and crypto can be risky.
In this episode, we discuss the most noteworthy crypto happenings in 2021, as well as the things that may have fallen under the radar, but that we think have a big implications for the upcoming year, 2022. And Cash, this is a great way to kind of just reflect on the crazy year that crypto was in 2021.
Right. Really seeing it go mainstream. We have celebrities and huge Fortune 500 companies squeezing into the space, and couldn't have really come at a better time when we're seeing, pretty high inflation and, regulatory things that need to get passed in Congress. So it's a pretty interesting to be in the space. And I'll lean on you a little bit more in the beginning of the episode recap, because I really came into crypto and more in the June timeline. So it'll be interesting to, talk more through the narrative after, having a whole half a year compared to the whole year that
Yeah. And I'd like to start the episode out by first, we're going to talk about some of the major themes of the year. And then we're going to kind of just go through the months, and we're going to highlight some of the major events kind of in each month, kind of in chronological order as we go through the year, and just kind of retrace the major moments that made 2021. So, what you mentioned already, one of the big themes of the last year was inflation. And we were getting stimulus checks. The government was printing a bunch of money, and we're now finally seeing that trickle down, not just in asset price inflation, which was, where it was mostly concentrated, but now we actually have, consumer price inflation that's happening now, that we're seeing, this past month, it was 6.9% or something like that in November. So yeah, we're definitely feeling that theme throughout the year, but now it's fully, it's kind of gone into mainstream attention, and that's kind of driving a bigger narrative around crypto. Some people say that crypto is a good hedge against inflation. Some people argue that it's still too much of a risk on asset, so it's not quite there yet because of the volatility. But there's a defined monetary policy, like Bitcoins or ethers, or will eventually become deflationary, is probably better than some of these other countries where we've seen a few bad cases happen this year. With Turkey is one of the ones that's recent.
Our friends in Afghanistan had some rampant inflation post pullout. And what the CPI for the US were right around 5%, I believe.
I think last month was 6.9.
6.9. So yeah, really. And I like what you hit on, the volatility of crypto is still there, but because of its policies for issuance, we can see deflationary aspects in the future, and that has a lot of prowess for the price and the volatility of the cryptocurrency.
Yeah, I mean, the more that inflation comes into the forefront, and people, at what point do you start taking action, right? At what point do you actually okay, look, like my dollars are literally just losing 7% of wealth per month. What if it gets into the double digits? At what point do you actually decide, okay, I need a new strategy here? At what point do you really start to alter your actions, whether it's in your finances or in your day-to-day actions, or maybe even think about some people I've talked to said they're thinking about relocating. If they're finding a different way to get around this inflation thing is one way, is to just move.
Right. There's the fully crypto city happening in El Salvador that we'll touch on a little bit later.
Yeah. But I mean, also just some of these countries are also just, more advertising that they're going to be more crypto friendly. I mean, there was a few, I don't want to get too far off topic here, but this kind of segues into the other theme we were talking about, is regulation. And, there's a few, airdrops and some other products that were available, that the rest of the world got, that were not available for US residents to get. So I think one was the DYDX airdrop,
Yep.
token airdrop. That was one big one that was blocked for US residents. So yeah, so regulation is a big theme of this year as crypto got bigger, and more into the zeitgeist. Regulation really kind of stepped up. We saw the SEC get a lot more active. We saw Gary Gensler, we'll talk more about this later, but take a harder stance on some of these issues. And we saw the infrastructure bill, of course, go through, but we also saw the galvanization of the crypto industry in DC, the crypto lobby, the blockchain association. We saw a lot more enthusiasm for participating in politics, because as the saying goes, if you're not at the table eating, then you're on the menu. And crypto for a long time wasn't at the table, and so the infrastructure bill came along and they put crypto on the menu, and like let's tax the crypto people, make everyone a broker, even though it doesn't make any sense.
You're a broker. No, but that's an interesting theme of bringing people into the space. And I think crypto has done that both for economics and politics. Went to Berkeley for poli-sci econ, and I was kind of shied away from both of those fields because of the current state of the US economy and political system over the past 2 decades. And crypto has really been a way to, have that more democratized feeling of, control over our government and our economics.
Yeah. And speaking of things that, create more new ways of organizing and spread power to the edges, NFTs exploded in this year. And that was another use case where you have intermediaries getting dissolved and power going straight into the artists, the creators, and the fans or the supporters. And we'll talk more about this later, but NFTs are really what kind of like brought crypto into this kind of new mainstream moment that it's kind of happening now. I wouldn't say it's fully mainstream, but it's definitely, it's the penetration into culture that crypto has gotten this year through NFTs, especially has been astronomical, and no one could have predicted that it would happen that fast. Like a waterfall. Like once the Beeple thing happened, it just was like a slow trickle, and then next thing you know, it was just like boom. We have Pepsi and Nike getting involved, and Budweiser, and all these major brands.
Movies and TV shows getting made with NFTs. Pretty cool
NFTs
stuff.
And celebrities getting all into the NFTs. And then another thing that really brought it into the mainstream was just crypto going more mainstream was Dogecoin, the meme coins, Shiba Inu, and all that. So those are kind of the major themes overarching of the year, but let's kind of go through now the top moments by month. And where do we start? Well, obviously we start with January.
Meme coins, you just mentioned them.
Yeah. So, I mean, I think, the major thing that happened in January was the whole GameStop debacle, and like, the whole Wall Street bets, Reddit, this whole memification of the economy really is I think really significant, because this is what kind of paved the way for all these other meme tokens and things that we're having, and just kind of this whole memification of the markets. And do you remember what happened with GameStop?
Yeah, so a Reddit community, Wall Street Bets, decided to short the GameStop stock and was making incredible amounts of money on it. And then they came in and stopped the trading of it.
Well, yeah. So the Wall Street Bets, so people on Wall Street Bets saw that there were a bunch of hedge funds that had taken out short positions on GameStop because they expected the stock to go down.
Right.
Because
that's
of the
right.
Pandemic. Among a few other companies like AMC, the movie theaters, like there were a bunch of companies. But specifically GameStop had like these insane short positions taken on. And so everyone just started buying it and trying to pump the price and put a short squeeze on these hedge funds. And it did happen, right? It exploded to over like $240 a share at one point. And then one of the hedge fund guys made a phone call to Robinhood and had Robinhood halt trading for GameStop stock because it was just getting like, I don't know, it was going to break the financial system, or they just wanted to protect their positions. Who knows? Kind of shady stuff went down, which is kind of also, I think, was like a huge thing that which just shows the power of crypto, right? And how, like, um, that probably, it could happen in a weird way in crypto, maybe in some, depending on what kind of blockchain and stuff. But like, um, Uniswap, like if you want to trade something on Uniswap, it's just a money robot, right? It's like, it's a protocol. No one can make a phone call to someone and be like, okay, like, stop trading on this token on Uniswap. And like, anyone can add a token onto Uniswap. So, this just is one point, one pro, what demonstrates one pro of decentralized blockchain technology. But
Right.
yeah, go ahead.
Well, and there's a really good Bankless episode on the history of electronic markets over the last 3 decades in the US. And because of the progression, each technological progression, they say, removes a layer of lawyers needed. And you no longer need to call up your broker and say, hey, issue this or buy this stock for me. You can now do it on your own with Robinhood. And so that allowed for the common person to have access to, this monumental kind of short option that, really screwed over big hedge funds. And it's because the everyday person had access to trading stocks really easily on their smartphone.
Yeah, I mean, you had like 14-year-old kids, in their basements, just like sticking it to these like Wall Street hedge funds. It's just like so funny. I mean, on YouTube and stuff, it was just like some of these guys is insane. So, I mean, I think that's significant because it just kind of paved the way for this whole kind of, like I said, meme thing. So then right after that was the whole Dogecoin thing, right? So Elon Musk started tweeting about Dogecoin, and that Dogecoin, if you're not familiar, I'm sure most of our listeners are familiar, but that's a fork of the Bitcoin blockchain. So it's literally a copy of Bitcoin, but it doesn't have the legitimacy that Bitcoin achieved. But it still became a meme, and it's, it's based off of, a Shiba Inu dog, but it's not the Shiba Inu coin. And so, Elon Musk was, a bunch of celebrities were tweeting about it and kind of making the markets move. And it went up to all the way, I think, 70, I think it came up to 78 cents during the Saturday Night Live skit when Musk was on Saturday Night Live.
Yeah, that's
For
right.
a moment, I think it touched that, which is pretty ridiculous. And then it also just totally tanked after that too, because I think Elon Musk called it a scam.
Well, it's interesting, and I'm glad you mentioned it's a fork, right? So it's taking the exact same code of Bitcoin, but then it just made another, ledger essentially that new people are mining, and the original Bitcoin miners aren't going on that ledger. So do we know how much volume like they're doing every day compared to Bitcoin?
You can look it up. Yeah, I mean, you can look it up. It's all
right.
online. Yeah, but I mean, the big picture here is that, we paved the way for meme coins to be a thing, and a lot of people didn't really take Doge seriously, and just thought it was a big joke. But then you had people become millionaires off of it. I know there was some Goldman Sachs, employees that made so much money off of Dogecoin that they quit their jobs. So, this. I know, there's a lot of people who actually made some decent amount of money off of it. So I think the big lesson there is, money is a meme. What is money? Money's a meme. Everything is kind of a meme. It's just like, how legitimate is that meme? How, because we all agree to believe in this noble lie of money, right? It's just paper, right? Especially fiat money. We all just choose that this is valuable, and we're trusting that if I give you this dollar bill or this $10 bill to pay for something, or you give me something, like I can go and take that bill and spend it again. Or if I pay you for something, you can take that bill and use it somewhere else, and someone else will accept it. Right. So it's a meme. It's just which meme is accepted at the moment. And we're seeing the memes change, right? We're seeing people's faith in institutions, in some of these things start to erode, and they're looking at other options, and crypto is another option.
Yep. No, it really is a interesting lookout on it. And we direct people back to our episode number 2. What is money? Like you said, it's all a meme.
Yeah. Just what is the best meme, right?
Right.
I mean, think about it, right? We used to use, if you go back, right? We used to use seashells at one point. We use, depending on the culture, we use salt, we use horses, chickens and silver and gold and things like that. And so we just remember that change of the monetary, what's used as money is normal, and that it's not anything new to have another evolution into a better kind of money, a better meme, essentially.
Right. How many countries rose and fell in between World War I and II, and post World War II saw rampant inflation of 1,000%, where those marks didn't mean anything anymore. So it's been a while. We don't know it too much here in the United States, but a lot of our other world citizens have felt some pretty rampant inflation over the years.
Yeah. And so speaking of some stuff ramping up, and then February, Bitcoin surpassed over $1 trillion in value in the market share for the first time on February 19th. That's a huge milestone. And that definitely got attention from a lot of people.
Yeah. Real big, taking up space right there. $1 trillion market.
Yeah. And that's when we saw, some major companies putting Bitcoin on their balance sheets, like Tesla. Elon Musk bought a bunch of Bitcoin. Square and MicroStrategy, which is Michael Saylor's company. We had people just kind of advertising to the world. They're like, by the way, we bought a bunch of Bitcoin.
Yeah, I think that was February that Musk was doing some more Dogecoin stuff too.
That's when I think that's when it really started to peak in February. I think that's when he was on SNL.
Well, then March is kind of when we first saw the ramping up of NFT sales, with Beeple's sale of $96 million.
69.
I'm sorry, $69 million.
Still, a ton of money.
That makes him the highest paid living artist, right?
Yeah.
So I'm pretty sure the top.
Yeah. He's definitely in the top. And he, I'm sure a lot of our listeners are familiar with this, but so he made a digital piece of art every single day for over 10 years. And so
5,000 days.
Yeah. So he put all of them together in one masterpiece and then sold that piece of art. And that was a huge moment, because that's when mainstream media, it was just such a jaw-dropping amount of money that it was on the New York, it was everywhere. It was on the cover of New York Times. It was on every news outlet. Everyone was like, that's when everyone was like, what's an NFT? I don't get it. And it seems so long ago too, because now it's like NFTs are so pervasive. But yeah, everyone was like, WTF NFT.
Yeah.
And I think, a lot of people they maybe read about it and things like that, but then it was kind of like, okay. And then kind of went back to their life. I don't think a lot of I know for me, I dug around a little bit and I started digging into more, but I wasn't I don't know. There were some other people who were really there were a lot of NFT haters at that point as well, who were kind of doubting NFTs and saying they were, for creators, they're a distraction, they're a trend, they're a fad. And that, this is just kind of going to be this new fad that just kind of passes. And I mean, in some ways, maybe you could argue that it was kind of a fad in 2021, but it's not going away. And, it definitely blew up in 2021, but they're still around and it's still kicking hard.
Right. Well, just a month later in April, Bored Apes launched, and they were giving them away practically, right?
Yeah. So Bored Ape. Yeah. So we're moving into April. We'll flow right into that. Bored Apes listed on 420, and the drop wasn't even competitive, and the mint price was 0.08 ETH, which at the time I think was $500 to $600. And you could have just gone onto the site and minted one during the whole drop week. It wasn't even hard to get one. And now they're selling. Eminem just bought one for over $460,000 in ETH. So yeah, pretty gnarly explosion of value with the Bored Apes. I think they were just valued at over, the whole collection is valued now at over $10 billion. This is
Some
mind
really cool,
boggling.
some really cool debate between the Bored Apes and the CryptoPunks too that we'll dive into more in our next NFT. But the whole IP argument for
Yeah.
giving away IP rights or not.
Well, that's one of the things. So we can talk. One of the success stories is, with NFTs is that a lot of them, they include IP rights for your NFT, so you can merchandise it or create derivatives of it in all different kinds of ways. Not all NFTs do that. It's unique. Each NFT collection, each NFT artist kind of determines how they want to do that. But the one that was significant thing was with Bored Apes is they did include that. So that was something that made them special.
Right. And so
another big, go ahead.
Well, with that, we've seen cartoons use the Bored Apes NFT. We see bands start to use them. We see ads start to use them. So it's all these big movers and shakers coming into the industry, appropriating or purchasing this NFT that's super hip and then getting mainstream kind of attention because that project has so much attention.
Yeah, it's definitely like an easy way to kind of slide in and get legitimacy for a project right now through the whole zeitgeist what's happening with Bored Apes. The way that people are congregate. It's a Schelling point. It's kind of like this one thing. It's kind of funny to watch these things, how they happen, right? It's all mimetic desires. That, like, why are they cool? I don't know. They got cool. They're cool because they're cool. But like, what made them cool? I don't know. Everyone wants them, and that's why they're cool. But why did everyone want them? Because they're cool. But why? It's just like this weird circular thing. It's just like, how does it want to? It just kind of has to start, and it goes back to that like kid on the playground running, like there's tons of toys in the playground, but he goes over and gets the red fire truck and starts to pick that up, and then like once he grabs that fire truck, then like all the other kids want to play with the fire truck too. And they've done this experiment with babies and stuff. So yeah, it's humans, and it's just so funny that it was around Bored Apes, because it's just like we're literally just being like apes, like, ooh, JPEG, this JPEG, cool. Oh, I want this JPEG. And then everyone's like, oh, he wants this JPEG, I want this JPEG, I will pay more ETH for this JPEG. Like, it's so funny, but it's cool. It's cool that NFTs are bringing so many people into crypto, and in such a fun way, right? They're just fun. It's creative, it's fun, and it makes the internet weird again. Instead of just having like the Google channel, the Facebook channel, or the Pinterest channel, the Twitter channel, now we have some other weird stuff going on. It's just so cool to like look at your Twitter feed and just see like a bunch of like random like looking cartoon characters as everyone's profile picture. But I guess if you don't follow a lot of crypto people, then maybe, or NFT people, then maybe you don't have that as your but soon, I mean, even if you follow some of these celebrities and athletes, they're changing all their profile pics to Bored Apes and whatnot.
Britney Spears.
But I don't know if she changed her profile picture to it yet.
Not yet.
Yeah.
We need to poke her. Tweet to her. When are you gonna do Britney Spears.eth? Come on.
Yeah. So what else happened in April?
Well, we saw some exchanges get to have some watershed listings. Coinbase got listed on the NASDAQ stock exchange.
Yeah, that's massive. So Coinbase is a big centralized exchange. Many of our listeners are probably familiar with it. You probably have an account there. You probably use it. But they weren't always, trade. They had their IPO. They weren't always listed, and that happened this year. And that's a big moment because it just brings legitimacy to the whole crypto world, because now crypto is literally part of Wall Street. For a long time, crypto was kind of like shunned by Wall Street or laughed at by Wall Street. And now Coinbase is a peer of some of these Wall Street, banks and things like that. So and traded, as well. So that's a major moment as well.
Yeah, allowing people to get into the crypto space have exposure to cryptocurrencies, but not necessarily take on all the risk of owning them themselves. So that's a cool way to, you buy one ETH in Coinbase, it's your one ETH. If it stays at $4,000 or if it goes up to 10 grand, that's your one ETH. So that's why we're always encouraging our listeners, when you feel comfortable, take custodianship of your assets and have control of them. Do DeFi.
Yeah, exactly. Exchanges are great, but eventually get the real crypto experience, get your own wallet, and go explore Web3. You can't do that if you keep all your stuff in Coinbase. But Coinbase does have a wallet now, so you can do the Coinbase wallet if you want to stay with their ecosystem.
Oh, that's right. So you'd then be able to do DeFi with that Coinbase wallet?
Yes.
Gotcha.
Yeah, but it's different than what's in your account. So yeah, but there's a lot of documentation on that. So if our listeners are confused, you can just check that out. There's lots of people on YouTube that explain it really well. Speaking of things that went really well, so we touched this before, but in May, just NFTs really started to pick up more momentum. That's when you saw Bored Apes go from just a couple ETH to really start to take into the double digits of ETH. People were kind of saying, oh, NFTs are in a bear market, but they think they were just kind of simmering before they really started to take off over the summer.
Yeah, and then June, some of the biggest news in the world for crypto was El Salvador adopting it as legal tender, adopting Bitcoin as legal tender, excuse me.
Yeah, some people were really upset about it, and because it was kind of came as a surprise for a lot of the locals. But one of the things is important is because El Salvador's currency, their peso, is pegged to the dollar.
Right. And so our monetary policy that we vote on, that we have senators come in and appoint people to high up legislative state positions, they don't have any control over that, but they're still determined by our US dollar policy.
Yeah. It's pretty ridiculous that you would expect them to just kind of just sit idly while they see all this rampant money printing happening. And they have really no choice but to just kind of go with it because the way that their policy is set up to be pegged to the dollar. So they want another option. And what crypto is, provides, and what Bitcoin provides is another option for these countries, for these smaller countries that, have a long time kind of just been kind of forced to kind of accept the dollar as their reserve currency. And now they have an option where they can literally have economic freedom that's separate from the regime of the United States. So I think I think this is the beginning of a lot of other countries who will follow suit in a similar way, because we kind of live in a world where it's kind of geopolitically divided between like China, and the United States, kind of these, and where a lot of these smaller countries are like, well, we don't really want to vibe with either one of those. We want to do our own thing because, China is doing the digital yuan, central bank digital currency. And so maybe some of these other countries are going to be like, you know what, like, let's not do the US stuff. Let's not mess with China. Let's do our own thing. We're going to just allow crypto to flourish here, and we're going to be crypto friendly, and we're going to base our economy on crypto. And maybe they issue their own digital currency. Maybe they don't. Maybe they adopt Bitcoin like El Salvador did.
Right. And, there were some protests in El Salvador. Some of the people thought that it wasn't legislated. It was just appointed. But we'll see what happens. I mean, we see it from our perspective in a way that gets rid of the monetary policy of the US, but obviously if they don't have the resources or the tools to implement payments with Bitcoin, then that is going to cause a big kind of bottleneck, at least to start, until more people have access to the online tools that allow those things to be processed.
Yeah, I feel you. It's I mean, it's a good thing. I think that it's kind of happening in a smaller ecosystem in a small country like that, where we can kind of. But it's also I feel for a lot of locals are like, wait, we have no say in this, and it's not really convenient for us. So this, I think it's a interesting experiment as they're rolling it out, and I think we're just going to learn a lot from what they do well and what doesn't go well. And I think other countries are going to get, I think it's just great for, for paving the way for a lot of other countries to leapfrog into this tech. Kind of like what happened with wireless technology. There was a lot of countries in Southeast Asia that went from having no landlines because they didn't really have like phone landlines and straight up into just, cellular technology. Some of these small towns and stuff, they went from having no phones to just having like cell phones, right?
Right.
Like they never had landline phones because by the time they were able to install it, it was just better and easier. And so they just leapfrogged the tech. So I think a lot of these countries where they have nothing to lose, right? Bitcoin hasn't, Salvador, there's nothing to lose by allowing, currency to flourish there. And you have to look at a lot of these other countries too. For them, cryptocurrency could be one of the best opportunities they have in this century to kind of gain more power and to become more economically relevant.
Yeah, we'll finish that inflation thought up in our December segment when we talk about the infinite machine. July, though, we saw record volume on OpenSea in July. So really, really seeing the NFT pump hit hard in July and just surge. And that's when we saw all of really big surges in the PFP profile picture collections, such as CryptoPunks, Bored Apes, generative art such as Fidenzas. And that's really kind of where we saw the generative art landing on the blockchain, right? Because people are familiar, generative art doesn't have to be crypto related. You can make any computer program generate art. But the cool thing about it being on the blockchain is that it's time stamped and it has a hash and it interacts with your personal hash ID and whatnot for creating that generative art. And we saw those really take off, specifically with Fidenzas.
Yeah, the whole generative art narrative was massive, and we saw artblocks.io, which is a generative art curation website and community. We saw like them just pumping out all sorts of generative art that was doing really, really well. And then we saw this new kind of format also come out with content creation in different ways using NFTs as a funding mechanism. And we saw Stoner Cats pioneer this with Vitalik Buterin, the founder of Ethereum, as well as Mila Kunis, Ashton Kutcher, Chris Rock, and Jane Fonda. So it was quite a cast of celebrities. They were able to really do it something brand new in the space by funding an animated cartoon about cats that like to smoke weed through NFT profile pictures of cats that look like they're stoned.
Yeah, and raised about $8 million in the launch over a day or so.
Oh,
and
that also reminds me, one of the other things that was happening a lot in July was these NFT drops that were just complete messes, where you had the time that it was supposed to be, say it was supposed to be okay at 3 p.m. on a Wednesday, you can start minting a specific NFT. And this happened with Stoner Cats, where it was just the website would go down, there'd be some kind of error, some kind of bug, gas wars, people were spending thousands of dollars in gas and then having a transaction failed, so they would just lose all that money. So it's just it was just insane to see this whole kind of just surge. It was literally made the Ethereum network like unusable for that period of time, when like there were certain NFT drops. You were just like, oh, I guess I'm not doing my transaction right now.
Right. Yeah, I'll leave that money in DeFi because people are spending $300 in gas to get an NFT right now.
Yeah, the gas war NFT drops over the summer were something to behold. And what would happen a lot of times, right, is like the drop would just be a debacle. There were so many drops that when they were supposed to drop, they ended up being delayed a day or 48 hours or something like that. And the discords were just going crazy with people just being upset about how the team couldn't figure out how to do an NFT drop. But it was really just because the mania was just so insane, and a lot of this infrastructure was just new. It was just people just hadn't figured out how to do these things yet well. And so there were a lot of mistakes made and people were learning, which also made it really fun.
That's a good leeway into one of the biggest things to hit August was EIP 1559, which was involving the gas limits and the estimating of gas on the Ethereum network.
Yeah, so this was a huge improvement that happened to Ethereum, major upgrade. And EIP 1559, that's what it stands for. EIP stands for Ethereum Improvement Protocol, or proposal, excuse me, Ethereum Improvement Proposal. And this was planned for a long, long time, and it finally was able to go through and update, and it was successful, and it was a major win for the Ethereum community and for, I think, the entire crypto community that uses Ethereum, at least, because it did kind of help mitigate some of these insane gas debacles where your transaction would get caught or fail. The way that it does it is that if there's a big surge in demand, it kind of smooths out how that demand goes, because if there's one person that wants to pay more, then they'll get in that block, in the next block in the blockchain, and then it will sell the rest lower. And so that, like, when there's a huge surge for the network, it spreads that surge out over a longer period of time, over so more blocks. So on average, you'll probably pay less on average over the long run. It didn't necessarily, though, improve gas fees ultimately that much, but just because the network just kept getting busier. So
Right, but it maybe stopped some people from doubling or tripling what they might have to get something through.
yeah, and then the major thing it did was, because say you put a transaction through and you put a certain amount of gas limit, say you, for just, example sake, say you put in $50 for gas for your transaction fee as your limit for what you put in for your transaction. But say while your transaction's waiting to process, the network gets really busy, and the gas limit now to get your transaction through is $60, but you only put 50. So now your transaction and under, before EIP 1559, your transaction would essentially kind of get stuck, and until gas would come down below that $60, right? And so you could be waiting for hours essentially, or it could, days even, and or you could try to cancel the transaction and do all this funny stuff to try to knock your transaction out or whatever. But it was just super cumbersome, and it just didn't make sense, right? So for the way that EIP 1559 works now is that if you put it whatever it recommends is like the highest it could be ultimately to get into the next block. It does some good calculations, and then it charges you the highest amount that would be needed probably to make sure it gets through. And then you send your transaction through, and whatever you didn't need from that estimate, it returns to you. So it might estimate like, okay, maybe we need to estimate $60, but it ends up only taking $45 of gas. So then you get that $15 back, but your transaction is guaranteed to go through.
And then the other side of EIP 1559 was the burning of ETH in forms of gas, and the deflationary aspect of Ethereum taking shape.
Yeah, and that's the other massive part of it. Whereas it didn't make ETH completely deflationary, but it did make ETH, it did increase ETH burn. So now we have, when transactions are, the transaction fees as they go through, now some of that ETH gets burned up.
Right. There's still issuance of ETH for providing security to the network, but there is also burning of ETH. So we have seen 1,344,000 ETH burned since EIP 1559 launched, which is about $5 billion worth of USD in ETH. So yeah, 5 billion burned just in fees. So like you're saying, there's some blocks that will be deflationary because more gets burned than issued, and there will be some blocks that are a little bit inflationary where there's more issuance. But this really is what hits hard for the money argument for Ethereum, the 3-layer value.
Yeah, exactly. The ultrasound money thesis, because if ETH is deflationary, then that means this supply continues to go down. And as more people come to the ecosystem and come to crypto, They're going to want to use the blockchain, which means they're going to have to buy ETH to pay for gas, or other chains that are using ETH, they're going to have to buy ETH. So there's going to be demand, curve going up while supply curve goes down. So that's very bullish for the price of ETH. And we've talked a lot about that before, but one thing that is also kind of connected to this update is, the ETH 2.0, or the merge is what we're kind of calling it now, which is scheduled to happen next year, or 2022. And that's another major upgrade to the Ethereum network. And I think what's important to overall about EIP 1559 is that the Ethereum community is capable of executing these major upgrades successfully. And that's just like, remember to think about, like, wow, they're able to do these huge upgrades to this massive network, and it works, and they're able to do it. So I think that just shows, the confidence that you can now project. Okay, well, because a lot of people are like, well, are they actually going to ever do this? And all these things also, these projects end up, taking a lot longer than usual, just because it's really hard stuff that they're working on. And it takes a long time to do it well and do it right and to test it and everything. So the more that the people in the Ethereum community are, can show that they can create and ship good work, just proves that, is a good indicator of that to be able to pull off major upgrades in the future, like the merge, which is coming up.
Yeah, we're all really excited for that 99+% reduction in energy usage from proof of work to proof of stake. So we're really excited for that.
Yeah, so you, instead of mining, you'll just have to validate transactions. So it's definitely gonna change the whole kind of ecosystem as well, because I actually just was talking to a friend that does some Ethereum mining, and he was talking about, getting some more rigs and things. And I was telling him, I was like, asking him, I was like, how much do you want to invest in that, considering, the merge is going to happen and ETH is going to move to a validating, proof of stake setup. You're not going to, those mining rigs are not going to be useful for mining Ethereum. I mean, I'm sure he could point them at something else, I guess.
Chia or something like that.
Yeah. So what else happened? Go ahead.
Yeah, the last thing in our dear month was the record hack of $600 million from the Poly network.
Yeah, that was crazy, because people could see the hack kind of happening in real time because it's on the blockchain. And this is one of the advantages of blockchain, because it's transparent and it's all out there. It's a public ledger. So really smart people could see this hack happening, and they were tracing the different wallet addresses as it was happening. And I think the attacker, the hackers, accidentally doxed themselves, because they moved some of the funds to a wallet that had been KYC'd, meaning their name was attached to this wallet address somehow through like a centralized exchange. So they pretty much were like caught, and so they essentially just gave all the money back, or took it. I think they gave like most of it back like pretty quickly, and then it took like a little bit longer to get some of the other funds back, because they got frozen by one government ended up was able to freeze some of the funds somehow. But it just shows to show you that, I mean, some of these hacks really, are successful, but some of these hacks, just because it's like, it just shows how the blockchain works. And yeah, it's hard to hide things on a public ledger.
Which is maybe a good segue into September. If you can't hide things, and
you can't hide them, and ban them.
Yeah, ban them.
Don't like people.
So yeah, just like what we were talking about with El Salvador giving more power to people through Bitcoin, China outlawed crypto mining.
Yeah, China banned cryptocurrency again. They just loved it. Like I think this is like, there's always just like so many headlines about China just doing some kind of ban on crypto. But they, this one is significant because they actually did force their mining industry to shut down and move. And I think at the time they had, I think some estimates put them up to 60% of the world's hash rate was in China, meaning 60% of the Bitcoin's network was being run in China. Yeah, and I mean, some people said that, they're using dirty energy. I think some of it was there's debate on what they were using, but obviously they do use coal there.
Yeah, so a lot of miners came to the U.S. and we saw a big shift over to what people are arguing is a little bit greener, cleaner mining operation.
Yeah, so what one man gathers, what another man spills, and so China was like, said no more mining, and all the mining industry people left, and a lot of them came to the United States. And so I think this is good for the overall narrative for crypto in the United States, because the United States likes to kind of just do the opposite of whatever China does. So if China bans Bitcoin and bans crypto, then the US is going to be like, well, I guess we should embrace crypto because it's like the opposite of that. And it's also a better like geopolitical kind of narrative too, because one of the critiques people did have of Bitcoin was that like, look, like China controls a majority of the hash rate, the majority of the mining. So we don't really like that about it, because it doesn't feel like it's in like American interest to support something that China has a majority of maybe essentially power over, which is arguable, but how much power they would have, because it's not like they could, I mean, who knows what they could do actually.
Right. So, I mean, if the authoritarian government came in and start seizing mining operation rigs and whatnot,
I mean, they could
have
essentially
full
control. Yeah, they could essentially just take over the hash, make the most Bitcoin. They could just like earn a bunch of Bitcoin and then start using that to kind of do other things. But yeah, who knows what they could have done. Either way, it's not going to happen because they shut down on mining. So
what did they replace it with? Their central bank digital currency.
Oh yeah, so that's why that's part of it, because they have the CBDC of the digital yuan, which they are going to roll out. They've been doing a lot of testing and stuff with that, but they're starting to roll that out.
Which we can give China some props for bringing people into the banking industry. They are allowing people to have access to digital currency where they normally would not have access to a bank, and allowing for some person-to-person crypto trading devices that don't necessarily need a signal all the time to trade and buy things. So they are helping people have access to some financial resources, but again, they're taking away a lot of power from the people and really trying to maintain control over their
because they also can surveil every transaction that happens with the digital yuan. So it's like cool, not cool. It's like now they can surveil their entire economy, and they can also freeze your wallet remotely at any time. So they can just be like, oh, now you can't spend any of your money. Yep. So we'll see what happens there.
I mean, it completely goes against everything we've been talking about with the beauty of decentralized Ethereum and other decentralized networks that allow people to have full control over their assets. And our Chinese friends don't have control over their assets.
No, not in that way that they're leaning. No. Well, October, this was a fun month.
When Mark Zuckerberg changed his name to Meta.
Yeah, so Facebook announced that they'll become Meta. That's their new name, referencing the whole metaverse idea, which people are still, no one can really define it very well. But some people think it's a virtual world. Some people call it a Web3 thing. Anyway, some people are saying it's like the merging of digital and physical worlds. Either way, Facebook's making a big bet on it, but who knows what it's going to turn out like.
Yeah, unfortunately for Instagram user Theme Boonem, Facebook stole Metaverse as the handle. So again,
yeah, she had Metaverse as her handle, and then
you don't
Facebook
own that shit.
Like,
Facebook owns your Instagram handle. They own your data.
They can do whatever they want. You're just renting. You're renting your username. You're renting your handle. It's rented land right there. They were like, nope, we need this, and they just took it from her. So another great advertisement for decentralized services and decentralized web and web 3.0, where you could literally like your ENS, like your ENS.eth name, like you own that. Like if you buy that, you own that. Like no one can take that away from you.
Right. It's like the IP boom of the 90s. Or sorry, the
.com.
.com boom of the 90s. You're actually
Yeah.
owning those addresses.
Yeah. Shaq got a .eth address and Paris Hilton got a .eth address. So yeah, this is a great understanding of how Web 2.0, Web 3.0 differ. Web 2.0 is you are renting. Web 3.0, you are owning. It's like renting your where you live, or your apartment, or owning your house.
Right. And so we actually even saw people purchasing land, quote unquote, in the metaverse. So people aping in hard to buying these digital assets that provide ownership of digital real estate in the metaverse.
Yeah, not only just buying the land, but building digital structures and businesses in the metaverse. We saw digital art galleries with NFTs. We saw concert venues, places that like gather and parties. So all sorts of cool games too that are kind of integrated with these digital worlds. We have Decentraland, Sandbox, voxels, crypto voxels, all these different kind of virtual worlds are starting to not just exist with speculation, but people are actually building on them and exploring them. I mean, the usage is still pretty low, I think, on some of them, but this was definitely a major trend that we saw, whereas people were actually doing things where like the metaverse is always is kind of like fuzzy idea, and now like some people are like participating in these early versions of the metaverse.
We saw a big move for Bitcoin in October. It was the first US based Bitcoin ETF. Tell us about that.
Yeah, so Bitcoin's futures ETF was launched on the New York Stock Exchange under the ticker BITO, and it tracks the contracts that speculate on the future price of the digital asset rather than the current or spot price. So as a result, the price of the ETF and Bitcoin don't always match, but doesn't really matter because it's just huge news that because Bitcoin ETFs, where people wanted to have a Bitcoin ETF in 2017 and 18, and they were all denied all the applications. The SEC was like, nope. So I think it shows the maturity of the space that finally have a Bitcoin ETF, and this also paves the way and gives precedent for more ETFs and similar products that are based off of digital assets and crypto to launch. And you know what? To be honest, I think it'd be really cool to have like a some kind of cool like NFT ETFs that are maybe tied to like punks or apes or something would be kind of cool.
I like that. Yeah. I mean, we've seen fractionalization, tokenization of NFTs, and
yeah,
allowing for more exposure for the artists and their fans.
Yeah, I mean, we're gonna do a predictions episode, so I don't want to get too much into it.
Right.
I don't want to shoot all our lightning right now, but yeah, the NFT meets DeFi, like that. When that stuff starts to get really starts to happen, we're gonna see some cool things happen. Well, I'll leave it at that. We'll get into that in our next episode.
Well, let's hop to November.
We had the infrastructure bill was signed, and this was a major story. Kind of piggybacks on this ETF kind of regulation theme we're on right now, where it was kind of must pass legislation, right? And so it had to go through. And when you have all this spending that needs to happen for the infrastructure, of course, you also have to put in the bill how you're going to pay for it. So the lawmakers in Congress were like, well, what about crypto people? Let's tax them. And essentially the language is really poorly written. So it made everyone that's involved in cryptocurrency or with NFTs essentially a broker, which would need to report all their information, kind of like 1099 like forms disclosing who your customers are. And every time you spent, a certain amount of money or anytime essentially you had NFTs that you bought or sold, you'd have to like know like all the information of like the person you bought it, who you sold it to, and just like really cumbersome stuff that just doesn't really match the ecosystem. So and then there was language that was introduced to amend that language, but then it got shut down. So it
Right.
got
So
passed.
this did see a rise in lobbyists for cryptocurrency and people talking to lawmakers about cryptocurrency. Lawmakers actually talking correct language and vocabulary about cryptocurrency.
Yeah, it was, it was a watershed moment for the entire crypto industry and crypto community, because prior to this, I think, I mentioned it earlier in this episode, is that the crypto industry wasn't that well politically organized. And it was kind of like, well, okay, that there was some people doing stuff, and the blockchain association did exist, and there was some other lobbying groups and in think tanks, but it wasn't a robust team working together. And a lot of major players in the industry didn't have representatives in DC. Like some of these major exchanges and stuff weren't really that committed to a political agenda. And we saw what happens when you're not involved, is you really bad language gets put into a must pass bill, and in the 11th hour, and now it's slated to become law. Obviously the law doesn't go into effect until 2024, so there's time to update it and hopefully make some improvements here. But like you said, I think that the positive thing here is to realize, and in the bigger takeaways, to realize that the crypto industry did get organized because of this bill. There were a lot of emails sent to Congress people and senators and representatives. A lot of phone calls were made. A lot of tweets were sent to senators and things like that. And so the crypto industry really showed DC and the world that, hey, like we're not just here to get pushed around. We're here to play. We're going to sit down at the table with the big boys, and we're going to lobby for what we believe is fair and helpful regulation, and not some of this stuff that just doesn't make any sense.
Yeah, they're going to be hashing out a lot more over the next 2 years, as you said. So we are both hopefully not brokers at the end of the day, because we're not doing things like brokers. So hopefully that will get hashed out.
Yeah, I'm confident it will. Like I said, the biggest takeaway here is that now crypto woke up to the fact that we have to. It's not you have to be involved. It's not enough to just be like, oh, like I'm a libertarian, like screw the government. I'm just going to go buy Bitcoin and have my own economy. That's great, but it's also important that we find allies in the political ecosystem, and like Andrew Yang is one of them, and then Senator Loomis from Wyoming. So there's certain people that's the other thing that's kind of came around too, is that all of a sudden people in DC woke up to the power of the crypto lobby and the crypto community, and we're like, wait, maybe it's actually a good idea to embrace crypto. Look at all these people who are really passionate about crypto, and also look how much money they have. Maybe I should support crypto.
Right. I mean, China just gave us a bunch, so we're just gonna throw it down the drain.
Yeah, and what was the other big news that happened in November was DAOs. Tell me what happened with DAOs, Cash.
Yeah, so our acronym, Decentralized Autonomous Organizations, really enter the mainstream. We saw a few DAOs get spun up, which just means they get created on the blockchain, and then people can join them by purchasing their tokens or whatnot. And being a holder of that token is essentially the voting rights for that DAO. And we saw a really cool one that you got to be part of, the Constitution DAO, to buy one of the rare copies of the U.S. Constitution.
Yeah, this was a really fun story, just because it showed the power of DAOs to coordinate and raise funds from all over the world to achieve a goal, right? So a bunch of people, over 17,000 people, raised over $49 million worth of Ethereum to bid on the Constitution that was being bid by Sotheby's. It was one of the original copies. And it made all the headlines. You know, it was in all the news. Everyone was like, "What's a DAO?" You know, it put DAOs into the spotlight, and it also, you know, created this also, I think, new kind of DAO movement too, where DAOs can be, you know, starting to be used for unique causes. And we saw this too with the Free Ross Albright DAO, or the Free Ross DAO as well, which is trying to free the creator of the Silk Road, Ross Albright, who's in prison.
Yeah, and they're also doing some cool stuff with letting family members in prison visit and help raise some funds for that sort of visitation. So DAOs, it's like the new LLC, the new corporate, you know, it's almost like a internet corporation, but with a little bit more access to democratized voting or something, you could say.
Yeah, well, when you had, you know, I love to draw examples to the Renaissance here, because when you have new economic models, you have new ways of coordinating and organizing people. When you have a new kind of markets. And so we saw this happen with the Renaissance. We saw the rise of the merchant class. We saw the founding of the Dutch East India Company, which was like the first like corporation, right? And they started to sell stock. So DAOs are kind of like this new crypto native way of coordinating and organizing around common values and goals. And they're just getting started. We're going to actually do a whole episode about them where we do a deeper dive into them. But I think the bigger takeaway here is DAOs are here to stay. They made some major moves as far as doing some really fun things and unique things in the last year. And maybe who knows what a DAO is going to buy. And I think we're going to see some more weird stuff happen with DAOs.
Oh yeah, that would be fun for our predictions episode. What are some of the weirdest DAOs going to be in 2022?
All right, December. Last but not least,
we start to see some Ethereum competitors get a little bit more market share. What do you think? Because we see the blockchain for Ethereum get more demanded and prices go up for gas.
Yeah, so I mean, this was kind of a theme throughout the year, but it kind of started to become it kind of was something that everyone was talking about towards the end of the year. It's just what people call ETH killers or alternative layer ones. And so these are, you know, other layer one blockchains that maybe make different have different properties than Ethereum, which allow them to have cheaper transactions. Some of them are like Avalanche or Solana. Terra as another one. So these blockchains, they saw their tokens value just explode over the year, and really just started to challenge the dominance of Ethereum as the kind of smart contract blockchain of choice, because now people had options that were cheaper.
One really cool take that we heard this year about the gas fees, to not necessarily look at them as a fee to do the transaction, but it's the cost to get immutably put on the blockchain ledger and have that transaction be verified.
Yeah, so you're like buying a slice of time on the internet computer of Ethereum, which is cool. You know, it's a cool way to think about it, but like the average, when you're trying to tell that to someone who's brand new to crypto, and they're just like, why does my transaction cost $150 to buy an NFT that costs $50? They're like, what? I don't care. I'm going to Solana. So I think, you know, Ethereum, you know, we've talked about it, a lot about this, and, you know, this debate continues on, but, you know, Ethereum was a victim of its own success in some ways, that it became so popular so fast before these layer 2 solutions have shipped. So, and fees are high because Ethereum has taken a different route in its architecture to be really decentralized. And yeah, so we saw, you know, the adoption of other blockchains with cheaper fees that were part of this. I think NFTs really kind of did it too. I think, you know, you had a lot of people wanting to ape into NFTs, but then they started to see the transaction fees, and so they started to go to some other blockchains. As also the token appreciation. I mean, if you're holding a certain token and it appreciates like some of these tokens did, then you're definitely going to be a part of the tribe. You know, after that, it does create it really builds a community when the token price goes up a lot.
Yeah, and we saw still, the majority of value locked in DeFi was still on the Ethereum network. There was DApp Radar reported over $200 billion in DeFi, and at least 60% of that in Ethereum.
Yeah, so we saw some of the market share go down, but it's still dominant. And I think we've talked about this before, that we believe in a multi-chain world, and we're just going to see which are the ones that are going to eventually win out. And we're kind of seeing this narrative really kind of took a lot of shape this year with Ethereum versus other layer ones blockchains.
Yeah, kind of funny actually. I sold a degen ape on Solana and didn't want to pay all the fees to get that ETH back, because I want to hold ETH. So I changed most of my Solana. I still have some Sol, but I changed most of it back to ETH, but I didn't want to pay all the gas fees to get it back to L1 ETH. So I just actually started doing DeFi in Solana with wrapped Ethereum. So there's use cases for everything. Maybe it's not as decentralized, but it's still doing some cool yields and returns for me.
That's awesome. There is a use case for everything. Sometimes the use cases haven't been invented yet, though.
Well, hey, we had one more report from DApp Radar that I thought was interesting to share, just on the NFT market for the year. And obviously, it's the best year yet for NFTs. What was NFTs in 2020? But over $23 billion in trading volume. Blockchain-based metaverses had over $500 million in trading volume, and in-game assets as NFTs garnered $4.5 billion in trading volume this year.
Yeah, and that just puts a cherry on top. I think that the biggest story of the year was the explosion of NFTs, because it brought crypto into a whole another host of use cases and users that probably would have never gotten involved, or would have taken a lot longer to get involved if it wasn't for NFTs, because NFTs put crypto into culture, because NFTs are culture, right? And I think that's the biggest story that we're moving into the next year is now that we have this overlap of crypto and culture, how does that evolve? And I'm excited to continue talking about what's going to happen in 2022 with you, Cash, in our next episode, which is going to be all about predictions and trends that we see coming up for the next year. So you won't want to miss that one.
Yes, sir. Thanks for joining us today.
Yeah, we're going to wrap it up here for today. Thank you for listening, and we hope that you enjoyed this end of the year episode.
Couldn't be more excited to explore the world of blockchain with you over the last 6 months. So keep on following us, please. Share us a review, and please do subscribe and leave us a comment.
Yeah, crypto is changing the world. If you paid attention in 2021, then you know that. So we're here to ensure that you are ready for what's coming.
Look forward to our next episode.
Cheers.
Cheers.